Good morning, Colorado, and happy Friday morning to you. It's been really a short week for all those that were able to take off due to Columbus Day, but in the mortgage industry, things have been busy and hectic. In today's issue of Colorado Mortgage and Home Loan Rate Update for this Friday, the 14th of October, and I'm Randy Flood, the only certified mortgage coach in the state of Colorado. In the rates go up category, retail sales came in better than expected. It was expected to be up 0.6%. It was actually 1.1%. And I know the headlines are going to say, great, wonderful, and everything else. Woo, woo, woo. But however, when you take out the auto sales, which were up 3.9%, retail sales were only up 0.6%, and that was upon really a very weak number before. So really nothing to get excited about. Corporate earnings have been solid, which is good. However, the earnings are not being generated by increasing revenues, and they're definitely not adding new jobs. So, they're still cutting people, laying people off, and becoming more productive in order to get that. Uh, what I'm more concerned about, and I think is really more important, is the Michigan consumer sentiment. It went down from 60 to 57.5, 57 and a half, and I think that's a new low. I know it hasn't been this low in at least 16, 17 years, and I think once again it's a new low, and I'll show you that in a second. Here's a chart. I have not updated it, but if you take a look, and I've actually put little arrows here, yellow is expectations, and you can see, the expectations are really low. You can see where they were in 95 and the other recessions that we've had. We're way below. So once again, the consumers are expecting the worst. And, when you consider, and this is a forward leading indicator, forward looking. So what happens is when you consider that the consumers make up two-thirds of the U.S. economy, if we, the general public, don't feel good about where the economy is going, because hey, we may end up losing our jobs, our 401k retirement plans are going down the tubes with the stock market tanking. What happens is, people don't spend, and if we're not spending, the economy is not going to improve, and of course, the housing economy is still in the pits, and no new jobs are being created by businesses. So we're really hurting. This is what's happening in the mortgage-backed securities. As I mentioned yesterday, we broke the downward trend. We're going up. However, you notice we've reversed that trend, and we're at the support level. And let me go on and show you the long term. When you look at the long term, you'll notice that we broke through the 20-day moving average, 10-day, 30 days, and we're down here on the support. Now, what's going to end up happening is if we don't hold here, I think we can go down maybe another 20 basis point. If we don't bounce back up, there's going to be a free fall, and I can't tell you when that's going to happen, but when it does, that means the rates are going to go up significantly. Here's a different way of looking at it, and this is with the treasuries. You can see that we've been on an upward trend, which is good. However, once again, with the treasuries, we actually broke that trend line, and we will probably drop down here. Also want to point out, and I know this gets a little technical, if you take a look where the bonds or the treasuries have really rallied, these long green candlesticks, you'll notice down here, and this is the trading volume. Trading volume is very light. However, when you see the red, where it's negative, you'll see that there was a lot of trading volume, and that worries me. So when there's heavy trading volume, and the treasuries and the bonds are going down, that's not good. After saying all that, I do want to point out a couple of things. One is I subscribe to several different mortgage market timing services, and this is Rate Alert, which is a fantastic timing service. And although I was talking about the free fall and everything else, I just want to point out one thing. Here you'll be able to follow the screen line where my cursor is, and whenever there's this is when the bond markets or the mortgage-backed securities are being oversold, and anytime when that happens, you'll notice up here, usually within the next day or so, the market rallies. So that means rates actually improve. Now, if you take a look at where we've gone this last couple of weeks, uh, the market is really oversold. So I do expect a little bit of a bounce back, which would be good for mortgage rates. I mentioned Rate Alert. They've actually changed their recommendation, and if you're closing within 30 days, they're basically saying lock, and only and just lock on any type of rally, and that's what I was trying to show you as far as where the market is overbought. Sometimes we'll have a rally and rates will improve. The daily rate lock advisory, their position is unchanged. If you're looking at buying a Colorado home or refinancing your Colorado mortgage, definitely give me a call. I'm available 24/7. Oops, I got a little ahead of myself as far as promoting myself. In summary, Spain is now downgraded by Fitch. No biggie because Standard & Poor had already downgraded them. As I mentioned before, retail sales pretty solid, but when you take out the auto sales, really not much improvement. Michigan consumer sentiment hits new lows. That really concerns me because, once again, the consumers, if we're not spending, the economy is not going to rebound. And as I mentioned, this is a forward-looking indicator. China's inflation dips, but it's still over 6%, so that means their rates are going to be higher. And what's going to end up happening is their economy is going to go on and slow, which will further slow the global economy. I was also surprised yesterday that the 30-year auction was solid, but that's good news. And the bonds, their mood is not positive. What's happening is anything that is remotely positive, what's happening is the stock markets, the equities are getting the spotlight, so everything, it's like, oh, it's not that bad. So the stock market actually rallies and the bonds are being pressured. As I mentioned before, we're technically challenged. We could see a free fall. The rates have been rising the last 2 weeks. Once again, I'm forecasting 5.5% rates by mid next year, 2012. And the thought of the day, no passion, no purpose, no passion, no passion, no power. When you take a look around and you watch TV and all these different shows, you'll see people that have terminal illnesses or they've lost limbs, and they have a purpose. They have a lot of passion, and they're very very powerful. And here we are, and we don't have any of those challenges. But we don't have the passion, we don't have the purpose, and we're not being very productive. I hope you enjoyed today's issue of Colorado Mortgage and Home Loan Rate Update. It is mortgage advice that you can count on. I do appreciate your comments. Please comment below and I'll respond. And as always, wanting only the best for you. Have a great weekend. Take care.